Interest rates are high, a looming crash, and properties are selling for over market value. Is there even a safe market to invest in out there?
Is there anyone alive out there?
In this video, we're gonna tell you where you should not invest in 2022 so that you don't end up losing massive amounts of time, money, and energy.
This is a question that we hear a lot in the Remote Multifamily Investing Academy, and if you want to hear the other side of the coin where you should invest, stick around to the end. We have an offer for you.
What we're gonna tell you will blow your mind.
I know it's gonna sound like the most ridiculous thing ever.
Where not to invest in real estate.
Your own backyard.
Say what? Jenna Stacy, are you crazy? Are you insane? Why on earth would you not invest in your own backyard?
Well, that's not the only place we'll tell you not to invest, but we will cover all of the ways that you're hurting yourself by sticking to that strategy.
People call us crazy. We've invested in 17 different markets across the US without ever leaving home.
What?
100% remotely, meaning we lived where we lived and we invested where it made sense.
What? That's right. We acquired 967 doors in 4 markets that we never stepped foot in just last year. Okay, so why are we actually telling you to get out of your home market, to get out of your backyard?
Most people who come to learn from us live in places that are either expensive or competitive. I mean, look at your own home market. Is it expensive or competitive? Because it's usually one or the other, if not both.
So why are you going to continue beating your head against a wall in an area where you can't really invest in a good cash flow market? So that's numero uno, why you don't want to invest in your backyard.
And if you happen to live in a market that meets all our criteria, hits the 1% rule, has a steadier growing population, has a steadier growing job market, we're still gonna tell you, get out of your backyard if you truly wanna live a life of freedom.
And let's talk about that, right? Because freedom, we're not just talking about financial freedom, we're talking about location freedom and time freedom. And when you're in your own backyard, I don't know about you, but I'm a little bit of a control freak and I'm going to the properties. Well, as I go visit those properties, look at those properties, maybe even pick up a hammer, I've been known to do that. All of that time that I'm spending in that property, I am not spending buying more properties, which is the key to scaling. Not to mention that while we're doing those things, in our market, there's all these bidding wars. I don't know about you, but we have students making offers. I've been there myself where I make offers and then I have to throw in an escalation clause. If you're out there right now throwing in escalation clauses so that you can just get into a deal, that's a big red flag that you are not in the right market. You're in a seller's market. You want to be in a buyer's market where you get a good deal. I'll tell you this, if you're in a market where that deal still makes sense as you put in an escalation clause, then that's fine. That makes sense. But 9 times out of 10, they just don't make sense. They don't cash flow the way that they could somewhere else.
All right, so let's talk just for a minute about what a cash flow market looks like versus doesn't. And I always use the example of San Diego because it's such a good example. So we lived in San Diego for, a long time, right? You could buy a regular 3-bedroom, 2-bath house in a very mediocre neighborhood for $700,000. One of the things that helps define a cash flow market is when the rents and the prices are in line in a way that you can still buy the property and the rents are high enough to get cash flow. So one of the early indicators of that is something called the 1% rule. And if you've watched our other videos, you've seen us talk all about it, but let me touch on it just really briefly if this is your first time here. The 1% rule basically has you looking at the property price. Let's say it's $700,000. In order for it to meet the 1% rule, we'd have to be able to get enough rent on a monthly basis to cover 1% of that. Well, at $700,000, 1% is $7,000.
Nope, Stradamus.
Yeah, it's not happening, right? That same house might rent for $3,000, $3,200, maybe even $3,500 when rental prices have been crazy, but it's coming nowhere close to $7,000, which means when you go to actually analyze that deal, what you're gonna find is it doesn't cash flow. Actually, it probably cash flows. It's called negative cash flow, right? And we are not in the game to build negative cash flow. The other challenging thing when you're in a market that is outside the 1% rule, where the prices are very high, is that it takes a lot of capital to get into a deal. You know, if you're gonna put down 20% on a $700,000 house,
you're talking 140 grand.
Yeah, and that's just the down payment, not to mention closing costs and like everything else. Like it's just a lot of money. A lot of people don't have that much money to get started. Okay, let's contrast that to a market that is more of a cash flow market. Let's say it does meet the 1% rule. An example I like to use is, let's say that you're somewhere in the Midwest. It could be Kansas City, Missouri. And let's say that I'm looking at a house and it's $150,000. I have to be able to get $1,500 a month rent to meet the 1% rule. That is not an analysis. We're not diving deep and making a decision on the 1% rule, but it is an indicator of whether the price and the rents are likely to line up. So if we can get $1,500 a month for rent on there, okay, I'm gonna spend time and look deeper into the market. But when we start looking at multifamily, it gets even better. Now, let's say we're buying a duplex, 2 units under one roof. Let's say it's $150,000. In order to meet the 1% rule, all we have to do is have each unit renting for at least $750 a month, and we've hit the 1% rule. Well, that is much easier to do in the Midwest than it is to do in California or New York or any of the other thousands of very expensive markets out there.
Speaking of those expensive markets, are they even landlord friendly?
That's actually a really good point. One of the things that you'll come to appreciate as you go along your journey and you start acquiring properties, you really want to be in an area, a market, and a state that is landlord friendly. So let me tell you what state is not landlord friendly so that you can get some contrast. Well, we lived in California for years, but we didn't invest there. Why is that? Well, 2 reasons. 1, it doesn't cash flow, but 2, and maybe even more important, the laws there are so tenant friendly that as a landlord, you could have someone living in your property for months and months and months without paying. That's not going to keep you in the game very long. You want to be in a market where the laws are at least even, if not weighted towards the landlord, so that you can have a better opportunity to predict what you'll actually be able to make in cash flow, as opposed to a market where who knows what's going to happen. All you know is you're likely going to lose some money there.
Hey guys, so you don't have to divulge all of your details, but we are interested. What markets are you looking at? Is it on the East Coast, West Coast, like somewhere in between? Share it with us. Drop a comment below. Okay, so now that we've told you where not to invest and what not to do, you probably want to know, well, what do we do? Where do we go? So the answer to all of this is remote investing, which is our blueprint and how we've been doing this for 20 years. Now, when it comes to our blueprint, there are 4 things that you gotta know so that you can implement them. And these 4 things, we're gonna cover them right now. But before we do, smash that like button, please. Like, give us some love so that we can continue to drive the algorithm and bring you more videos that will help you. Go ahead, hit it.
Okay, the very first thing we want to talk about is logistics. When it comes to investing remotely, one of the things that's very difficult for people to wrap their mind around is, how am I going to do that, right? If you've grown up in the time that we've all grown up in, you're probably used to driving to a house, going in it, walking around and looking at it, like you can see it, touch it, feel it, like you feel like you have control because it's right there. With remote investing, it's a little bit different. We're not going and seeing, touching, and being in the property. We are making data-driven decisions. We are leading a team. We are project managers. We are CEOs. It is not our job or a role to go in and be touching the property. We have people for that in those markets, and we'll get into that in a minute. But let me first just talk about logistics. How do we go about doing that? There's 3 tools that you're gonna need in order to invest remotely in markets that make sense and will provide you with cash flow so you can have the life of your dreams. That is a cell phone, a computer, ideally a laptop, but any computer will do, and some helpful apps. So let me give you an example of our favorite app that we like. And we have all our team members across the US using this app. It's called Marco Polo. Now, this is not sponsored. We're not getting paid for this. We're just sharing with you like what has made our life so much easier when it comes to investing. So Marco Polo is this really cool app. It's like a video walkie-talkie. It's almost like you could FaceTime or Duo someone, except it's not real time. So if I have something to say to one of my contractors or my realtor, I get on and I do a quick little face video. They get notified, they watch the video, and then they respond. If I'm available right then, I see it right then. But maybe I moved on to do something else. I'm taking one of my kids to school, or I don't have to be available right at the same time my team member does. We have found that an app like that, and specifically that app, has helped us so much because not only can we communicate face-to-face with whatever team member, when it comes to visual things, and we've done lots and lots of rehabbing over the years, tons. When it comes to visual things, it's really nice when your contractor can flip the phone around and show you what question he's asking about. Or if you have a realtor who's going to the house for the first time, they can do Marco Polo and basically show you around the house. And even if you're not available right then, maybe you're at work, right? And you could watch it as soon as you're available. And now you have a visual record of the walkthrough of the house so that you can feel like you're there. And you'll see, it takes a little bit of getting used to adjust to that, but seeing it in that way takes all of the emotion out of it and allows you to make data-driven decisions that are ultimately gonna build your wealth.
All right, now that you've got that, I want you to just sit there and envision what Stacey just said. You can envision yourself. A lot of people think that this takes a lot of time and that, oh man, how am I gonna do this with a 9 to 5? Well, we did that. And it's so possible. You can envision yourself using that tool and you're mobile. At the beginning of the day, you just look at everything and like send videos out to your team and disperse what needs to happen. And then throughout the day, you get those updates. So it's really like maybe 10 hours a week that you can divulge to this, and your team, you're leveraging the team, which is awesome. But in order to do that, you've got to research a market to get into. So that's the second thing. So you got to figure out, what kind of research do I need to do? Stacey, how do they research a market?
All right, well, we have whole master classes on this, but let me give you 3 quick ones. One is look at the prices and look at the rents. Does it meet the 1% rule? If it doesn't meet the 1% rule or come very close, don't even waste your time, because that's gonna be an area that probably does not cash flow. That's the whole name of this game, is to build cash flow so that you can have freedom. Time freedom, location freedom, all the things that we talk about. So that's the very first thing, 1% rule. The other thing is you want to be in an area where the population is at least steady, if not growing. We're not looking to invest in areas that the population is getting smaller every year. And finally, we want to be in areas where the job growth has been steady and ideally growing. You don't want to be investing in an area where the unemployment is climbing. So we're looking for solid markets that meet the 1% rule, and that's a great place to start when you're just getting going.
Okay, so now you've got your market selected and you've realized that it meets all the criteria. It's got the 1% rule. You want to dive deeper. The first thing that you got to do is you got to start building your team. So you've got to do an outreach. Little outreach campaign doesn't hurt anybody. You got to look at, okay, how do I get a contractor, realtor, broker, all of those things, inspector? Well, the first thing that you got to think about is you're not limited, like in your backyard, you're not going to just walk outside and scream for those people from your front porch. You're going to go to your computer and you're going to research for those folks. You're going to be doing the same thing whether you live in Ohio and you're investing in, I don't know, Oklahoma. You're gonna get on your computer and start researching in that area that you've just selected, that market that works really well for you. Okay, how can I start reaching out to real estate agents and brokers to start getting deals into my inbox, preferably with comps, coming to you so that you can analyze them and you can start making offers. That's the first step. And then in that market, you also want to get in there and you want to investigate what is the GC bench strength in that market. How can I start reaching out to those and talking to those contractors about potential deals and what are their terms, and start building relationships there. But you're getting your team together remotely and building that relationship. And as you get deals coming in, you analyze them and you start making offers, getting into action. Now, when it gets locked up, you get the contractors out there to do bids. It's really that simple. And that's where the Marco Polo, full circle, that's where Marco Polo app comes back in. Let's go walk the property. Let's develop our scope of work. Let's get into this. It's not that hard. It's simple.
All right, those are all really good points. So let's recap, like, what is the entire process start to finish? Number 1, select your market. Number 2, you want to start getting deal flow coming in. Well, you got to get your realtor first. So reach out, contact realtors and brokers in the area, get deal flow coming in. Number 3, you're going to analyze those deals. And number 4, you're going to make offers. Now, you're probably going to make offer. Expect to get a lot of no's. That's okay. You want to make sure you're getting the right deal. So what happens, let's say you've made your 5th offer and, oh my God, it's been accepted. Right? Okay, after you are done throwing up out of, oh my God, I'm terrified, which is totally normal when you're new. What's gonna happen next? Next, you're gonna go into due diligence, because you made your offer, but you don't really know what's wrong with the property until you do due diligence. You're doing financial due diligence, you're doing physical due diligence, you're gonna get your home inspector in there, contractors if applicable. You're gonna talk to your property manager about the rents. You're gonna dig into all the numbers. All right, next step in the process, assuming everything's gone okay there, is you're gonna get your lending and your funding lined up. Then you're gonna go get your insurance lined up, and then you're gonna be talking to the title company, and then finally, closing day. Yeah, I do opera.
Okay, remember that offer that I mentioned at the beginning of the video? This is the time. We want to invite you to our free Ask Us Anything training that we're doing. And the link is down below in the comments. Click on it, go through the registration, and you have the opportunity to come do a training with us and ask us questions live on Zoom.
So if there's any markets that you've been considering, you're looking into, and you're just not really sure, is it good, is it bad? Come on over to the Ask Us Anything. We'll be happy to look at it with you and help you make some decisions.
Yes, go register. We'll see you there.